Hello and good morning. I'm Ethan Feller from Zacks Investment Research, and this is Momentum Mondays. As usual, we're going to take a look at what happened in the market over the last couple of weeks. Then we're going to take a look at the economic calendar and see what we got ahead. And then I'm going to share 3 stocks with top Zacks ranks that fit into a nice momentum trading pattern. Also want to note, this is going to be the last time we meet for the year end. So since I'm not going to talk to you, I hope you all have a good holiday as well. So as we head into this holiday week, it's definitely on the quieter side in regards to economic data, although there are still a few important points. So the beginning of the week is pretty quiet. Monday, not much. Home builder confidence index. Tuesday, housing starts and building permits. Wednesday, U.S. current account, existing home sales. And then Thursday, as always, we're going to keep an eye on these initial jobless claims. We're still hovering in these low 200,000 numbers. And, as we've said, this is going to be, if we want to see an economic slowdown, this is really first things we want to see start to pick up. And it's really yet to pick up. Additionally, we get the final Q3 GDP revision. And, it'll be important to see what that number looks like. 5.2% is the estimate, which is an extremely fast annual GDP growth rate. And then Friday, we get some pretty serious information in the form of PCE inflation. This is the Fed's preferred measure of inflation. And of course, it's going to be critical to what the Fed decides to do with interest rates. And so, let's get into the charts. So we got the NASDAQ 100 here. So last week, we were in this consolidation, and I was thinking, we got strong seasonality next week, so maybe we trade sideways before we break out. But the market didn't care about what I thought, and it broke right out of this nice little range here. They had a really powerful week, and you can see the NASDAQ moved 500 points higher. Monday we broke out. Tuesday we traded further, and then Wednesday it really ripped higher after the Fed had their FOMC meeting, and they shared a more dovish stance than a lot of people expected. A lot of market participants were like, "Oh my God, they pivoted. This new regime." Jerome Powell is talking about cutting rates. I think the market was strong, and it sort of pulled everyone's opinion to be really dovish. I thought he was just as measured as he's always been, and I felt like his speech basically just met what the market expectations already were. Either a March or a May interest rate cut. And, he said we're barely mentioned that we were talking about interest rates. And actually, Fed President Williams spoke the next day to confirm, we're not really talking about interest rate cuts yet. So, it is what it is. The market ran with the narrative that they thought it was, and it a really strong market. So we're definitely bumping up against overbought conditions, but we're now entering. Let me show you the seasonality chart. We're now entering this extremely seasonally bullish period. These final 2 weeks, you can see it right here. That's a very upper right hand corner of this chart. This is a really bullish 2-week period. So as much as the market is overbought, it can continue to be overbought. So definitely don't fight this market. But it also doesn't mean the market has to stick with these seasonal trends. So, I'm going to show you some leading stocks, and those tend to do well whether the market goes up or down. So, but broadly, I wouldn't be surprised to see, maybe some choppy sideways action before another leg higher, but it's just a very strong market. You can't fight this. Take a quick look at rates. You can see rates dropped precipitously. This is the 10-year government note rate, and really powerful drop, and that's an important catalyst that pushed stock prices higher as well. It's also worth noting that interest rates, part of what goes into pricing them is economic growth. With higher interest rates, I've been just keeping an eye on potential signals that we're seeing some economic growth slowdown. As interest rates drop and bond prices rally, it's early signals, maybe economic slowdown. But as we said, no real smoking guns yet to say we've got an economic slowdown. Also, last week we were watching the price of oil. I thought we could see it firm up, and just this morning we're getting some really strong moves in oil. We put it in a bottom middle of last week, and we're moving higher. So I think there could be one final move in the year end, maybe to close to 80 in oil. So I'm going to share an oil stock that I think looks good as well. And probably worth taking a look at Bitcoin as well. Bitcoin has had an incredible year. So, 160 odd percent. And, it was quiet at first. And then after it broke through this 38,000 level, it seemed like everyone was paying attention again, but sort of eased off the highs. This too, I wouldn't be surprised to see it sort of languish before the year end. And just it's had such a powerful move, but you never know what this thing could just break out and go higher again. And take a quick look at interest rate expectations. So this is the Fed Watch tool. It takes a look at the federal funds futures curve and can give you estimates on what the market expects Fed policy to be moving forward. So we can see right now there is a 65% chance that the first interest rate cut happens in March 2024. So I'll show you. And then we got 1, 2, 3, 4, 5. And then, these are kind of iffy because they're under 50%, but, 3 to 6 cuts, but as many as 6 cuts potentially next year, which is very dovish. Now, last week, FOMC said more like 3 cuts. So the market is pricing in very dovish expectations, whereas I think the Fed gave a bunch more tempered, should, make traders a little bit more tempered in their expectations, but nonetheless, the market thinks, we're going to get maybe up to 6 cuts. When we look at the March meeting, we can see just how much these expectations changed. So current target is 525 to 550 basis points, and we see the March cut 500 to 525, 65% odds now. A month ago, it was only 28%. So it's been really a big change, and it's been an important factor in what moved stocks significantly higher from. We had a break here, but remember, it was a scary period in late October. We were rolling over, and people were like, there was all kind of crazy narratives, and the market just ripped higher, and that was an important factor in the market strengthening up. That this dovish, interest rate cuts are coming narrative started to really help stocks go higher. So yeah, that's it for this little market overview. And let's take a look at some stocks, some individual names. AMZN is back on the Zacks rank. It's got Zacks rank 1 ranking. E-commerce is in the top 14% of the industry rank. And I think AMZN right now looks like one of the better Magnificent 7 stocks. And we'll take a look at the chart in a second, but got great earnings growth forecasts, 28%. And, we all know Amazon. And so let's take a look at the chart. So we started this video a little bit late today. The market is already open. And because the market was so strong last week, a lot of stocks that were setting up have already started to break out. This is today's move here. Amazon, this thing is going. We broke out last week above this 147.75 level. And I thought there was a little continuation pattern here above 150, and it broke out, and we're moving higher. So maybe a little bit of a chase here, but with the seasonality on its side, I imagine Amazon rallies right until the very end of the year. So you might have to take a little bit of a smaller position if you're going to go long, and move your stop down here. I think back below this breakout level of 147.50, and this chart might be broken. I don't think it's possible. I don't think it's probable. Maybe you sit and you wait for some pullbacks. You put some limit orders around 150 level. Yeah, Amazon, great stock, top Zacks rank. Another one I want to look at is Monday.com. This is another tech stock, software company. It's for like internal applications for companies. And yeah, got top Zacks rank, high up in the industry rank. It's got an extremely high valuation, 127 times forward earnings. But it's a very fast-growing stock, very fast-growing company. Let's take a look at the sales and earnings growth. You can see sales this year are expected to go 40%, which is pretty impressive for a company of its size. Earnings per share are expected to go 300%, although we flipping from negative 73 cents per share to $1.48 per share for the expectations. And then next year, a nice little 16% gains are expected on the earnings. So it's got a good looking stock as well. Yeah, this one has been traded. It's got a similar setup to Amazon. It had this big downward channel, broke out. It got a little scary in those October lows, but you set up another flag here, broke out last week, and now we got this nice continuation pattern. I like these gaps and then these sideways patterns. And yeah, we see Monday.com trade above 194.30. I think that's a good trade. You can put your stop either below here at 185.31, or it breaks out. You can, as long as it closes above here, then you can put your stop maybe just below the breakout level. Yeah, that's it for Monday. Another good looking chart. Fast growing company. Yeah, I just want to note as interest rates fell and these expectations for slowing, for falling interest rates happen, for rate cuts rather, a lot of these smaller technology companies that sort of got killed, right? You can see Monday.com was to $425 stock back in 2021 in those bubble kind of times, and it really got absolutely killed in 2022, down to $75. I mean, it's like 85% sell off. Absolutely brutal. As interest rates were much higher. The expectations just for these companies became much more real. But now they're trading off of these really low bases. And if these dovish expectations really come true, and we see the Fed cut next year, these smaller, mid to smaller cap, this is a mid cap, but mid to smaller cap technology companies, they could be real winners in 2024. So, I'll put together a watch list of software and technology stocks that got killed in 2022, started to pick up in 2023. And, if interest rates really fall, like investors are expecting now, these guys are going to be real winners. I really like the cybersecurity stocks as well. Although there's not many on the Zacks rank right now. And then lastly, we're going to take a look at this oil name. We got Murphy USA. This is it's a oil company. It's like a gasoline retailer and convenience store. And like a lot of the oil names, it's got a very reasonable forward earnings multiple, 14.6 times. And it's got a top Zacks rank. And, I think oil has got another little run in it before the year end. And I think that could propel these oil stocks higher. Let's take a look at the chart. So this one, finally, we got one that hasn't broken out yet. And yeah, we got this really nice bull flag building in the chart. Murphy's had a good year already. Traded from started the year around $266, $358 now. Consolidating, breaking out. You can see I've been following this stock all year. We got another nice consolidation here. So if we can see Murphy move above $366, this week, that would be a nice breakout. And, I wouldn't be surprised to see it make new year-to-date highs if it does get above there. And it's got to move in accordance with oil, but I think this is a good oil stock to play the oil rally with. And yeah, that's it for today for the stocks. That's it for today, folks. Hope you found this video useful. If you do like this video, definitely subscribe to Zacks' channel on YouTube. And if you want more information from Zacks, I would go and sign up for the promo in the description, or just go to zacks.com/promo. Like I said, this is the last video of the year, so I'll see you all again in the new year, and hope you have a happy holiday.